Hello everyone. Thanks for joining us today and welcome to this presentation of the three main components of a winning strategy. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. We are an educational company with our goal to teach and educate you so that you can ultimately empower yourself with the things that I've accumulated in my 38-year career. I've been trading for that long. I started out on the floor of the Pacific Stock Exchange, where I was on the floor for a total of 16 years, and 9 of those years I was a specialist, meaning that I made markets in anywhere from 35 to 50 stocks. So I've traded through the crash of 1987 and the bull market that followed, and I've been involved in just about every trading environment and condition that you can think of, and I've traded just about every strategy and system you can think of. And so I know what works in terms of consistency, and I know what doesn't. About 7 years ago, I teamed up with Pro Trader Strategies. They handle all my marketing and promotion, and we formulated Specialist Trading, where all I do is teach and mentor my students all the things I've accumulated in that time and the things that I currently use in my own trading. So our philosophy is really to teach you so that you can ultimately make your own trading decisions and not have to rely on an outside source. This is the way 99.9% of most traders trade. And that's why the majority of traders fail, in our opinion, because you're really not believing in what you're doing. You're just counting on someone to tell you what to do or how to trade. You have to put the power back in your hands, and that's how you'll become consistent. Now, today I'm going to inform you of 3 great techniques that you can start using as early as tomorrow if you like. In fact, if you had them the day before, you would have done very well in today's market. I'm going to show you some examples. But before we begin, as always, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 main components, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I would like to take this moment also to invite each and every one of you, if you haven't done so already, to follow us on Twitter. Here is our handle there, abbreviation for Specialist Trading. You may want to write this down. It's at SPC LST TRADG. I post information on a nightly basis there, anywhere from just financial wisdom to actual signals that our strategies have generated. In fact, I posted some great strategies not only in the Forex markets, but also in the S&P. We had some sell signals that were generated just this morning, as well as some great signals in the Forex currency pair, so you might want to check it out. Now, the information on Twitter is rather limited because of their format, so if you want more detailed information, such as videos or a little bit more about what I do or how long I've been trading, my sister site, Pro Trader Strategies, has put together a Facebook page. So you can like us on Facebook there. Just simply go to Pro Trader Strategies, and you'll get a lot more detailed information about what we do, how we teach, and just our basic philosophy about the markets. Okay, so before we begin, as I stated, we are an educational company. We are not a systematic company. We really don't believe in systems. I've taught and traded systems myself in the past, and my experience has been that they usually don't hold up very well. And the reason is because you take out the human factor. You don't have the person trading involved in any way. So if you get a signal to buy or sell something, if it's a system, regardless of the environment, regardless of the conditions, you must trade that same way each and every time. But what we do at Specialist Trading is teach strategies. This allots roughly about 30% discretion. And when we mean discretion, we don't mean just hoping and praying. What we really mean is an insight, an experience that you've gotten through practicing or paper trading or through my mentorship. And so you can change the format just a little bit, 25 or 30%, just to accommodate the market conditions. For example, today was an extremely volatile day to the downside, and if you had wanted to take advantage of that, you could have been more aggressive rather than take a quick exit. You could have stayed in for the long haul and reap much larger profits. This is what we mean by having some discretion. So this is what my goal is, to teach you how to trade with the Specialist Edge, not to simply trade for you, not to tell you what market is the best market to trade, what's the best time frame, what's the best amount of shares or currency pairs or odd lots or futures contracts to trade. We don't believe in that. That should be your decision. And the way you get through that decision is through my mentoring and my teaching you all the things we've accumulated in 38 years. So that's just a little bit of background about what we do. As you see here, this is my goal. This is the same edge that was able to turn my trading around when I first struggled some 38 years ago. And this is what we teach and mentor all of our students. So Here's what you're going to learn today. Since we are an educational company, I'm going to first start out teaching you a great component for getting in sync with the market. Then we're going to show you a particular price bar that you should be looking for regardless of what market, strategy, or technique you're trading. And then lastly, we're going to show you an entry technique, how you can fine-tune your entries. Many traders actually are not on the wrong side of the market. They actually have a very good idea. It's their entry technique that gets them in trouble. This entry technique will increase your odds for consistency even more. All right, so let's begin. And before we start with component number one, if you happen to have any questions, kindly wait till the very end of the class, just in about 20-25 minutes from now. Then we'll go over into a question and answer portion. Many times if you wait for the next slide, your question will be answered, but I have a lot of great free information to give to you, and I don't want to slow it down with questions. I will answer one question, which is the most popular, and that is this being recorded? Yes, it is. So if you have to leave early or if you're having technical difficulties, we always suggest to turn off your computer or turn off your browser and then log back on again. Maybe that will help. But if it doesn't help, you can request a link to this recording, okay, and watch it at your own leisure. All right, so let's begin with component number one. And that is you must trade in sync with the market. All right, this is Trading 101. Everyone knows this. Everyone is taught this day one of their trading. But if everyone knows this, and if this is a standard basic philosophy of trading, then why do the majority of traders fail? We believe at Specialist Trading it's because everyone and their sister has a different idea of how to find what the trend is and how to determine what the trend is. Okay, it can either be an indicator, it can be looking at a pattern, it can even be based off the tides of the ocean, but everyone has a different idea. And most of them, in our opinion, are faulty. They're not terrible, but they're just not as consistent as we would like them to be. Let me show you an example here of a generic chart. We specifically took out the title of the chart as well as the time frame because we want to show you that this will actually work with any market in any time frame in any direction. Now, someone who is not familiar with my courses or my videos would say, well, if we asked them what the trend was, they'd say, well, Steve, there is no trend. From my experience, we're just going down, then back up, and then going back lower again. So this means we are in a range. So I've always been taught, don't trade a rangy market because that's where you get whipsawed. That's where you lose money. So there's no trend. We're in a range. I'm going to stay out of this. All right. That's the way the majority of traders trade when they look at a chart. Here's the way we find out at Specialist Trading what the trend is. In my 38 years, it is the most powerful but the simplest way of finding out what the overall trend is. And that is you simply add a 50-period simple moving average. And then you ask yourself, where is price in relation to that 50-period moving average? If price is above the way it is here, well, then the overall trend is up. And we don't just stop there. If the overall trend is up, what does that mean? It means you will only be a buyer. This means you will never be selling if price is above the 50-period moving average. I know over time you will say, well, Steve, God, there was a great sell today and I didn't do it because we were above the 50 and I'm missing these great sales. But over time, it's like playing the slot machines. You really will not have anything to show for it. It will give you this false sense of security every once in a while. Well, there'll be a great trade. But over time, you'll actually have more losers if you try to sell if price is above the 50. And remember, once again, this does not matter if it's a 5-minute chart, if it's a weekly chart, a tick chart, or a monthly chart. The same principle applies. Now let's look at this chart here. Once again, generic chart here. Someone looking at this would say, Steve, there's no direction here. We're pretty much just going sideways, so I'm not going to trade this. But at Specialist Trading, we don't think that way. What we do is we simply add a 50-period simple moving average. That's the only thing we do, even though someone would say that we're in a range. And this tells us that price is below the 50-period. So, if price is below, then the overall trend is down. If the overall trend is down, are we going to be buying anything? No. If price is below the 50, the only thing we will do is be selling. You see how simple this is? We've automatically, eliminated half of our losses because we're on the right side of the market. In fact, if you go back and look at your last 10 or 20 trades, I can almost guarantee that the reason why you probably lost money on some of those losing trades was because you were buying below the 50 period and selling above. All right, so now that we know how to find the overall trend, we go to component number 2. And we want to look for bars that close either in the top or the bottom 25% of their range. So what does this mean? Remember, it does not matter what type of bar we look at. What most of our students have trouble with is they say, well, Steve, I only trade candlesticks, or I only trade open, high, low, close bars, standard bars. It does not matter, because what we want to do is view a bar, and we want to take the range. The range is not from open to close. The range is not from open to high. The range is from extreme high to extreme low. It does not matter if this is a candlestick bar or a regular bar. The extreme high would be the top of the candle wick. The extreme low would be the bottom of the candle wick. Okay? And then you simply divide it by 4, separate but equal parts. And if you close in that top 25%, the way we did here, and if you are above the 50-period moving average, the market is telling you, not some person in a chat room, not some trading guru on TV, but the market is telling you that that is an indication to buy, that most likely we are going higher. Once again, see how simple this is? We're taking all of our cues from the market, not from some guy in a webinar even. Remember, as I stated in the opening statements, the reason why most traders fail is because you're relying on someone or something to tell you how to trade, what market to trade. There's only one thing you should rely on. That's the chart in front of you. Now, as we look here, we are above the 50-period moving average once again, and these 3 bars closed in the top quarter of their range. Okay, now we can do the same thing with the opposite side of the coin. We take the extreme high, the extreme low of a bar, we divide it by 4, and as we see here, if we close in the bottom 25% and we are below the 50-period moving average, the market is indicating that we're going lower, and this is most likely a sell. Okay? This is a great clue that the market is giving us. And as we look at this generic chart that we looked at earlier, we're below the 50, and here's a bar that closed in its bottom 25%. All right, so now we have some bars that are of interest, but how do we enter? Well, here's component number 3. This is called our confirmation method. We're going to enter upon the confirmation of trend. And what exactly does that mean? I'm sure most of you are saying, well, I thought we already figured out what the trend was. What does that mean? If we are buying, if we're above the 50 and we find one of those bars that closed in the top 25% of the range, we are going to buy if price trades 1 to 5 ticks above the bar that closed in the top 25% of its range. So in other words, we're not going to buy at the market. We're not going to place a limit lower. We're going to wait for price to trade above that bar. So let's look at that generic chart once again. And it would not matter, once again, if this were a 5-minute chart, a tick chart, or a monthly chart. It works on any time frame, any direction. So as we see here, if we take the first example, well, we want to buy if we trade above it. We don't want to place a limit down here. We don't want to buy at the market. We have to trade above it, and most likely we want to trade above it on the next bar, which is this bar right here. So did we trade above it 1 to 5 ticks? No, we never did. So we're not doing anything. There's no setup. The setup is negated. So we just wait for another bar. Now here is another bar that closed in the top 25% of its range. All right. We want to buy, but only if we trade 1 to 5 ticks above on the next bar. And we did. As you notice, we did not close there. It makes no difference where we close. We're not interested in the close. All we want to see is that sometime during that day or during that 5-minute bar, we traded 1 to 5 ticks above the bar that closed in the top 25%. And we did, so that's your entry point. And as you can see, we went up for the next 3 to 5 bars. Now I know this doesn't look like a lot, but for all intents and purposes, these could be monthly bars. That could be a gain of 20 or 30 points. You don't know. It's all relative. Let's go to the last example. We want to purchase if we trade 1 or 5 ticks above this bar. All right, but it has to be on the next bar. It does not matter where we close. It just has to be on the next bar. Well, we actually did enter because it traded there again, still closed lower, but that's okay. And this one worked out a lot better. To see how we entered into these 2 setups, not because of some news event, not because of interest rates, not because of jobless claims, not because of volume or what the institutions were doing. We're only listening to the most important thing, and that's the market. All right, let's look at the confirmation method if we want to sell. If we find one of those bars that closed in the bottom quarter of its range, we're going to sell if price trades 1 to 5 ticks below that bar. But it must trade below it. Doesn't have to close below it, just has to trade below it. and we want to see it happen on the next bar. So here's the bar that closed in its bottom 25%. We're below the 50 period, and this is where we want to sell. But it has to happen on the next bar. Whether this is a 5-minute bar or a monthly bar, it doesn't matter. So we see it did trade there. Once again, it closed higher, but we are not concerned where it closed. We only wanted it to see that we confirmed that we were going lower on the next bar. Why? Because the market's giving us a clue that we're most likely going to continue. So we enter, and sure enough, it did continue. So we've just given you 3 of the most important components that we feel you could be applying to your trading right now. You just have learned and seen how to apply these. You can add these to any strategy, any technique that you're currently using. Or if you're so inclined, if you have enough experience and the know-how, you can actually build a strategy based off of these 3 components we just shared with you. In fact, one of our most popular as well as consistent strategies is based off of these 3 components. In fact, these are 3 of the 5 rules in this strategy, and this is strategy number 4. Let me show you some of the examples that strategy number 4 has recently generated in some signals using these 3 components. So I'll just show you that it is in one of our most popular strategies. This strategy is traded in over 92 countries around the world. It's traded in literally every state in the United States by students of ours. And it is probably one of the most consistent strategies we have to date, strategy number 4. And you just learn 3 of the rules. Now, we can't give all of the rules to you. That wouldn't be fair for the people who have paid good money for this strategy. But I just gave you 3, and you'll see how simple it is to apply. All right, let's start out with stocks now for all you stock traders. And as we see here in this older example in MSI, at this point we crossed above, and we had consecutive bars closing above the 50-period moving average. So what is that telling us? Is the trend down? No, the overall trend is up. If the overall trend is up, are we going to sell anything? No, we're only going to be buyers. We don't care if some system, some master system you have says to sell MSI. We don't care if someone in the chat room says sell MSI. You will have more consistency if you are only buying above the 50-period moving average. All right, so what do we have here? Well, we have a bar that closed in its top 25%, and strategy number 4 generated a buy signal. But we can't simply buy at the market. We have to wait for price to trade 1 or 5 ticks above. All right, so we want to see that happen on the next bar, and sure enough, it did. We traded there, and in the next 2 or 3 weeks, the stock went up 8 points. This was an actual trade this past summer. Here's another one in WYN, WYN. Where is price in relation to the 50-period moving average? Price is below. Are we going to buy anything then? Are we going to look to buy WYN? No, we're only going to look to sell. Now, what do we have here? We have a bar that closed in its bottom quarter of its range. It's below the 50, and it met all of the other 2 rules of strategy number 4. And I'm sure a lot of you are saying, well, Steve, here's one that closed in its bottom. Here's another one. Here's another one. Why aren't these sell signals? Because they did not meet all the rules of the strategy. So the strategy automatically generates a sell signal, but we can't sell at the market. We have to wait for it to trade below. And you'll see in just a few moments how important this technique is. So it just has to trade anywhere from 1 to 5 ticks below. It's up to us. It's our discretion. Remember, we make the decision. Some of our students say, well, Steve, I only need it to trade 1 tick below or above. Others say, no, I need to see it trade 5, maybe even 7 ticks above or below. That's fine. There's nothing wrong with either of those decisions. The only wrong thing would be if you tried to mimic someone else. You have to make your own decisions as to how you're going to be trading. You have to become a part of the process in order to become consistent. So we want to sell right here, and we would have sold probably on the gap down if you were so inclined, but you still would have made 7 points in the next week or 2 to the downside. About Oracle, and this is a little bit more advanced. Okay, as we see here, we're above the 50, we're below the 50, now we're back up above. But as you can see here, we close above the 50 and we close in the top 25% of its range. Okay, so therefore the strategy generated a valid buy signal. It's a little bit more advanced because we're not fully 100% above the 50 period, but it's still valid. But we can't simply go long at the market. We have to wait for it to trade above. So let's see what happened the next day. Well, we gapped up a little higher, but that's okay. Oracle gained 7% in just 2 weeks. That was just a little over a month ago. This was a month ago in IBM. We're below the 50 period moving average. Here is our setup. We're closing in the bottom 25%, and it was a valid sell signal using the remaining 2 rules and requirements of strategy number 4. So we can short IBM, which was just about a month ago, if we trade there on the next bar. As we can see, we did, and IBM went down 10 points in the next week or so. Here's another example in Pepsi, and I want to show you this for a main reason. Here was one buy in the middle of October. All right, it was a valid buy signal. We're above the 50 period, so we're only going to be buying Pepsi because we're above the 50. We're not going to sell anything. So here was a valid buy signal. You would have purchased here, and in the next week you could have made a quick 4 points. Now here's another signal that was generated a month ago on the 3rd of November. Here's where you want to buy. This is why we always say you have to wait for price to trade above on the next bar, because as you see, we never traded there, and had you simply bought at the market, you most likely would have ended up with a loss. There was no confirmation that you went higher. Therefore, you didn't want to take that trade. Now, as we see here in FOSL, we have a number of sell signals. That's the beauty of strategy number 4. It just doesn't generate one. If we're on some type of a trend, it will generate multiple signals, giving you many chances to stay in. Now, most of the traders that we trade with like to get in and out rather quickly, but we teach you ways to stay in longer if you would like. So you could have taken each one of these valid signals and gone short and just gained a little bit, or you could have stayed in longer and waited for some news to ultimately come out and had a 27-point gain in a couple of months coming into November, okay, had you taken this very first signal. Now, obviously, some news came out here where the stock gapped down. Did we know about this in advance? Did anyone from the company, did the CEO call me up and tell me to tell all my members to go short FOSL? No. The only thing we were looking at was our first component. Where is price in relation to the 50-period moving average? This one component will help you so much. It has helped me so much in my 38 years of trading. I can almost guarantee it will really improve your trading if you just use it. All right, let's apply this now to the E-mini S&P, and I'm going to show you an older example to show you the consistency rate of this method using the same 3 components. Here's going back to August, an example of a buy signal that was generated on the 10th of August. Now, this was a little bit more advanced because we're oscillating once again above and below the 50-period moving average. So we wouldn't really suggest a beginning trader to take these trades. But once you're more advanced and you have a little bit more experience under your belt, you would see here that we closed on this bar in the top 25% of its range. It happened to close above the 50, so it's still valid. And so you would have entered, and you would have entered on the next bar, and guess what? It went down, you would have most likely lost money. If you used an initial stop, say right here, you would have lost money on this trade. So I don't want to sit here and tell you that every trade works out perfectly. That's not the way life is. That's not the way trading is. It's more about 2 steps forward, 1 step back. From time to time, we will have losses. The beauty of all of our strategies and techniques is the consistency. The consistency meaning that many times it is so resilient that you will make up the loss on the next 1 or 2 trades later. So as we see here, this would have been a loss at the beginning of or middle of August. And then as we go forward about a week or so, we had a sell signal that was automatically generated. We closed in the bottom 25%, and we closed below the 50-period moving average. Although it's still a more aggressive trade because we're bouncing it back and forth, it still meets all the rules. And so you could have taken this on the 19th to go short on the 20th, and look what happened. That's when the market fell out of bed, thousands of points in mid to late August. 230 points in 3 days. We're not saying that all of our members stayed in for 3 days, but you would have had that much to work with. Now, had you only sold 1 contract, well, that's close to $12,000 per contract in 3 days. You could have easily made back what you lost on the first trade and made it back. This is just an example to show you the resiliency of strategy number 4 and these 3 components. Remember, you're getting 3 of the rules to the strategy already. Now, it just doesn't work on daily bars. Here's a 60-minute time frame going back a month, and the same concept works again. Here was a buy signal. We were above the 50-period moving average. A buy signal was generated on this hourly chart. And if you had been very quick, sure, you could have made a little money, but most likely you would have been stopped out. Okay, so this most likely, for all intents and purposes, was a losing trade. It really didn't go anywhere. But then a day or 2 later, you met with 3 winning trades. All right, had you just taken the first one, and gone short and held it for about 3 or 4 days, well, that's 50 points to the downside, $2,500 per contract. You could have easily made back what you lost on the first one and made it all back just holding on for 2 or 3 more days. Once again, we're not going to sit here and tell you that every trade works out perfectly, but these 3 components will really increase your odds for consistency if you do them over time. Now let's move to the Forex markets, because I know there's some people here that like to trade the Forex markets. Let's go to an entirely different market, an entirely different time frame, but using the exact same components. This is a weekly chart of the Canadian dollar. First thing we say is, where is price in relation to the 50-period moving average? That's the 50-period moving average right here at the very bottom. Price is above. So are we going to try and sell short the Canadian dollar on a weekly time frame? No. Even though its price has been going lower and we had one up day, we're not going to think it's going down the next day. We are only going to be buyers. Now at the end of this day, we close in the top 25% of the range. Remember, we take the extreme high of the wick to the bottom and we divide by 4. We close in the top. We're above the 50. And the rest of the rules were met for strategy number 4. So we're going to buy above. And we did. We entered right here. And in the next 3-4 months, 1,100 pips. That's $11,000 per one contract trading the Canadian dollar. Same rules apply. We didn't change anything. We can use this on a monthly time frame. Let's say you're an investor, okay? And you see here a setup on the Australian dollar. Now, as we see here, same rule apply. Where is price on this monthly time frame in relation to the 50-period moving average? You see how nothing changes. It doesn't matter if we're looking at a monthly chart or a 5-minute chart. If price is below, well, we are only going to be sellers. So that means that we're going to be selling right here if we trade below this, because we met all the rules, and 2,300 pips coming into November of this year. That's $23,000 if you've just taken this one setup and held it the entire time. Once again, we're not saying that everyone is going to be holding on for this extreme trend here. But that's how much room you have to work with on many of these trades. Many of them will just continue to go lower and lower. We show you ways how to trade in and out rather quickly if you like. We also show you ways to stay in the trade for a long period of time if you'd like. All right, so let's recap before we go to the questions and answers here. Remember, here's what you learned today. We gave you 3 of the main components that you can apply to any strategy, any trading method that you are currently using, or you can build a strategy based off of these. I just shared with you these 3 components. Number 1 is trading in sync. All right, we know that everyone has a different idea how to be in sync with the trend. This is the simplest and most powerful way I know of trading with a trend. The overall trend is by just applying a 50-period moving average. Okay, if the majority of price is above, or if your entry is above, you're only going to be buying. That's it. If the majority price is below, you're only going to be selling. It's that simple. Now, sure, from time to time, you will have some great buys below the 50 and you'll have some great sells below the 50. Just like when you go to Las Vegas, from time to time, the bells and whistles will go off at the slot machine and you'll think you won a lot. But if you stay at the slot machine over time, you'll see you have nothing to show for it. You really didn't win. It's the same way with trading out of sync with the 50-period moving average. Over time, if you just simply blindly take buy and sell signals not using this technique, you will most likely lose money, or you won't be making as much as you should be. Like I said earlier, go back and look at your last 5, 10, 20 losing trades. Most likely you were buying below the 50 period and selling above the 50 period. Okay, that's component number 1. Now that you know the overall trend, look for this particular price bar pattern. If you're above the 50, look for a bar that closes in the top 25% of its range. If you are below the 50, look for a bar that closes in the bottom 25% of its range. Why? Because that is a unique clue. That's an edge coming not from some guy in a chat room, not from somebody on TV, not from a webinar that you're listening to some guy speak. It's coming from the market. The most important thing and the only thing we feel you should really be listening to. And the market is literally screaming, I'm going in that direction most likely for the next 3 to 5 bars. Okay? So if it's closing above the 50 and it closes in the top 25%, most likely for the next 3 to 5 bars, you're going to be going higher. Doesn't matter if it's a 5-minute bar or a monthly bar. In fact, you can go and start checking these things, on your own. You've just been given for free 3 tremendous, tremendous edges. And then the last one obviously is an entry technique. If you decide only to use one of these, you could use the entry technique. Even if you like using your strategy, you feel comfortable with it, you can simply just not buy at the market or place a limit order. Wait for price to trade above the previous bar's high if you're going long. If you're going short, wait for price to trade below the previous bar's low. Okay? So these are the 3 main components. You've seen how they apply with one of our best strategies that we just shared with you. That's strategy number 4. Now, in conclusion here, as we close up this presentation, ask yourself, do you think this edge could have helped your trading this past year? Any of these edges, even if you just took the first one, the 50-period moving average. As I stated, if you went back and researched this, I really think it could have. Now, what if I could give you 3, 4, 5 more edges just like this, very similar, very powerful, very simple, but entirely different, totally different edges to help your trading and to help elevate your trading to the next level. Well, here's today's special for all the attendees today. It's a discount. It's a great, great special we have to get your trading back on track. Hopefully, turn your trading around in 2016. It's our Secrets of a Stock Exchange Specialist training sessions. Now, what this is, it's 3 hours of trading techniques plus a full strategy on a online video seminar. Now, about 3 years ago, I was asked to speak. I was the head speaker at a seminar in Denver, Colorado. I was asked to speak, and I spoke for 3 hours, giving many more high probability trading edges, just the way I shared with you today. But I also gave all of the complete rules to probably one of our best pullback strategies at Specialist Trading. That's strategy number 1. In fact, let me share with you some of the recent strategy signals that this strategy has generated. And I'm going to give you all the rules in this Secrets of a Stock Exchange online course. Now, this a couple of weeks ago, actually, this was just a little over a week and a half ago, WRK generated a sell signal using strategy number 1. As you can see here, price was going lower coming into the end of November, but coming in to December, we started to go higher. Now, someone here could say, well, maybe this was a bottom, Steve. I think the institutions came in here and the volume picked up. So this looks like a bottom here. Why would I want to sell? According to the rules of strategy number 1, it was saying that we're in a pullback, and all that means is that the overall trend was down, and this is just a quick bounce before we go lower. So if you were a student of the Strategy 1 course, you could have seen this signal. You would have gone short, and it was 7 points coming into the 15th of December, okay? Probably much lower if we include today. It also works to the upside. This was just this past week. This was Monday. This was an actual strategy number 1 signal. Now here we look at PSA. We realize it's an expensive stock, but many of our students like to apply options. They don't purchase the stock. They simply buy calls or buy puts. Someone looking at this would say, well, Steve, how can we buy this? It was going up, but then the market looks terrible, and look at everything started to roll over. I know we closed up, but the stock looks like it's really rolling over, and the market looks terrible. Well, doesn't care. According to the rules of strategy number 1, we were simply in an overall uptrend, and all this was a pullback to the downside. So it generated a buy signal this past Monday, and had you purchased it, the next day it went up 8 points. You could have easily gotten out that day and made a quick 8 points, even if you purchased a directional call, which many of our students do when you have overpriced stocks like this. We can also apply this to the currency pairs, okay? So it doesn't even matter if we don't trade stocks. Here's a couple of signals that were recently generated in the British pound. As we see here, someone would say, well, Steve, the British pound is going higher. I think we should be purchasing this. There's some good economic news, some good worldly conditions going on. The British pound is in an uptrend. Actually, it wasn't. It was in a downtrend according to the rules of strategy number 1, which I'm going to be giving you in this course, and that generated a sell signal just about a month ago. And as you can see, coming into December, the British pound fell out of bed. Now, we had another bounce coming into this past week, last Friday. On Friday, strategy number 1 generated another sell signal for all of our strategy number 1 course members, and look what happened. In fact, it even went lower coming into today, and this was a 500 pip gain or $5,000 had you taken both these signals. Now let me show you something that happened yesterday. Okay, unfortunately I didn't have anything for today because it was too busy and the market was really traveling a lot today. But yesterday, now remember the news where they raised interest rates, and initially the market went up very strongly, as we see here on this 1-minute chart of the E-mini. This was yesterday towards the last hour of the day. This is 12 o'clock Pacific time. And this is when the market was rallying tremendously. Now, most people say, well, the end of the day is where you want to be out of the market, and most likely we're going to sell off here as we started to roll over and come down lower. But according to the rules of strategy number 1, we generated a buy signal on this 1-minute time frame. So even if you're an intraday trader, you would use the exact same rules, and look what happened in the last 40, 50 minutes of the day. You would have gained 10 points or had 10 points to work with if you wanted to stand that long. That's $500 per contract. If you had $10 10 contracts, that's $5,000, in the last 50 minutes of the day. It's up to you. But as we just shown you, these are all strategy number 1 setups that occurred in the last week or month. They're all using the rules that I give away in the Secrets of a Stock Exchange Specialist training sessions. More high probability trading edges. We tell you the difference between a system and a strategy. We show you which indicators not to use, which is extremely important. But I think the most important thing is we go over the entire rules, where to buy, where to exit, where to place your stop, money management. All this is included for learning how to trade strategy number 1. Because if you notice, this, in today's presentation, all I did was give you 3 of the main components. Strategy number 1 is an entirely different strategy with entirely different components. And you're going to learn all of those as well. So this is 3 hours of trading techniques plus a full-fledged strategy, probably our best pullback strategy to date. This is a video seminar, and on my sister site, which is Pro Trader Strategies, they market and promote all of my courses, all of my techniques on their website. They have this marketed for roughly $1,000. That's how popular it is, and that's how much jam-packed information there is in this 3-hour seminar. What we're doing today for all the attendees, and in good faith for the end of the year, hopefully to have you become members of Specialist Trading, we're dropping the price down to $37. We don't think you can get this much information, jam-packed full of edges and techniques, along with a full-fledged strategy that usually costs hundreds and hundreds of dollars. All this combined would usually cost you close to $1,000. We're giving it to all the attendees today for $37 only, but this is for a limited time only. So if you want to wait and think about it for a couple of days, you're probably going to miss out. The price is going right back up to $1,000. So here's how to take advantage of this great offer. Once again, Pro Trader Strategies, they are the people you want to contact. If you look on the far right-hand corner of your screen in the chat box, they have posted a live link. I have the link at the very bottom of the page here, but you'd have to copy and paste that onto your browser. If you just want to click on a live link that will take you directly to that $37 sign-up page, simply look in the chat box on your far right column of your GoToWebinar column and click that on, and it will automatically take you to the sign-up page. $37, you'll be up and running in a matter of moments. And one thing I didn't mention, once you purchase any of my products, regardless if it's a $37 deal or a $10,000 package, you are a student of mine for life. So you will have my full email address. You can contact me with any questions and ask me anything. I'm your personal mentor. So that also is included in this $37 deal. Okay, I'm going to leave this information up. If you want to contact Pro Trader Strategies, you can call them directly or email them. Probably the best thing to do to take advantage of that $37 deal is just to click on that live link in the chat box on your far right. But let me open up the question and answer box, and thank you so much for holding off on any questions. And let's see here. Someone says, William asks, Steve, what is a pip? Is it like a tick? Yes, a pip is simply a unit of measurement for the Forex markets. So it's different for each currency pair because they're defined by different costs or different dollar amounts. But rather than getting too technical and too complicated, yes, it's just similar to a tick, but that's what they call basically a tick in the Forex markets. They call it a pip. Now, to go into more information, exactly how they're used or implemented or how many pips create a point, I would contact your broker. But it's simply a unit of measurement, okay? Christopher asks, Steve, what about using the 50-period exponential moving average for day trading or short term, 1 to 5 days the same week? Okay, Christopher, there's nothing wrong with that. And remember, as I stated, I want my students to become a part of the process. So therefore, you always have that 25 to 30% discretionary room to alter things. The main thing I want my students to understand with this component number one, is it is not a trading strategy. It is not a system. It is simply a very simple but powerful tool for getting you on the right side. So once you know what side of the market to be on, you can apply any strategy, any technique you want, a little structure. Having said that, just some type of structure to tell you when to get in. But you're not going to apply structure if you're above that 50-period moving average. Now, if you want to use a simple or an exponential, that's fine. The main thing is the concept. The concept is what I want you to really focus on. Whereas if price is above, you're only going to be a buyer, regardless if it's a simple or an exponential. If price is below, you're only going to be a seller. Now, are you going to buy or sell at the market? No, absolutely not. You need structure. That's what we teach in our courses. I teach you structure on how to enter different strategies, different techniques. We just know what side of the market to be on, okay? So it doesn't really matter that much in terms of exponential or simple. In my 38 years of trading, I've experimented and I've found nothing better than the simple moving average. But it's up to you. If you feel comfortable with the exponential, that's fine, okay? Todd asks, what about stops and profit exits? Risk control is everything. Exactly, Todd, and we teach that in the course. But remember I stated, I just gave you a free appetizer. If I owned a restaurant, you came into my restaurant, I just gave you a full platter of a couple of appetizers. But I can't give you the entire meal for free. That wouldn't be fair to the people who are sitting in the restaurant who paid full price. We definitely go into exit points, advanced exits, advanced stops, but that's in the course. Okay, so you're getting all this information, just about half of the rules with the three main components. The other things included are something that are involved in that $37 deal. So $37, that's not a lot to spend to get more information about exits, about stop placement. It's tons of information, and for $37, I don't think you can go wrong for that price. In fact, I can almost guarantee that most of you probably spent more than that just by trading today. So if you really want to get the best bang for your buck, I would say really take advantage of this great deal, okay? Hollis asks, can these rules be programmed into a scan or a mainstream platform such as TradeStation? Yes, they can. In fact, all of our strategies, can be usually have the buy and sell indication, the arrows or the dots for TradeStation. They also have them for MT4, Metastock, NinjaTrader, Thinkorswim with a few alterations. But in the beginning, we really want you to understand the process. We're not just offering you these things to say, well, you don't really have to understand why we're generating a buy signal or why we're above the 50. Just all you need to know is there a buy arrow or sell arrow? We really don't believe in that because, once again, this takes you out of the game. This is the way most traders trade. They just blindly take trades by trusting or relying on someone that they think knows all the answers. I want to provide you with this information so that you'll make your own decisions. I want to teach you as your mentor so that you can ultimately spot these on your own. I've been trading for 38 years. I don't use these scans. I don't use them at all. I literally just look at the chart and I can spot them in a millisecond. I would like you to get to that point as well. Even though we do provide you with these scans and with these add-on indicators, they're mainly for educational tools, okay? Thomas says, I experienced technical difficulties in the beginning recording. Can you send me a link? Yes, just contact Pro Trader Strategies and they will send you a link to this, okay? Todd asks, does the video cover strategy number 4 too? No, Todd, no, it doesn't. Strategy number 4 is one of our premier strategies, and it's a little bit more than $37. I just gave you about over half of the rules to strategy number 4, but I can't include that in the $37 deal because it's just too much information. We have people that have spent really good money on that. You may want to contact Pro Trader Strategies. For all I know, they may be having a discount with strategy number 4 as well. If you purchase the $37 deal, they may be able to do something with you, but it's up to Pro Trader Strategies, okay? Let's see here. You are more than welcome, Thomas. Any more questions? Hollis is saying what he meant was, could he scan for stock trading the range so we could easily find opportunities, not make the trade for us? Yeah, as I stated though, I don't know if you understood me. We have this, we have these available, but we don't want you to rely on this, okay? Uh, it's much easier in the beginning. In fact, what we do in all our courses, even though we provide our members with these scans and this information, what we do is we tell them to be able to spot it on their own first before we give them access to these scans and the information. So if that's the correct question I'm answering, yes, we do have the scans available for that, for stock trading. But in terms of the range, I'm not really sure what you mean by the range, because we didn't really speak about any range trading or anything. All we spoke about was the if you're talking about the range of how to do the top to bottom, I think that's maybe what you're talking about, Hollis. The how to see where the stock is in the top quarter or its bottom quarter. That's very simple to figure out on your own. Okay. Now, as we conclude here, once again, I think that probably most of you, if you traded today, spent more than $37 trading. In fact, if you go out to dinner this weekend, I don't think you can go out to dinner with someone else for less than $100 these days. So for $37, you're getting a lifetime of information that you can use as long as you'd like. This is a video course, but it's an online video course. So you don't have to wait for anything to be shipped to you. There's no package that's going to arrive in the mail. This is a link, and you can watch it at your own leisure whenever you like. At your, during work, during your lunch break. You can watch it at home as often as you like. It's yours to keep, and you can use it as a refresher course down the road. But it's jam-packed with information. People paid hundreds of dollars to hear me speak years ago in Denver at a conference, and now you're getting all of this plus the strategy for just $37. But if you want to take advantage of that, please. You have to do it within the next 24 hours or so, because this will go back to roughly $1,000. There is a link posted at the very bottom of the screen in front of you, but that's not live. You have to copy and paste that. If you just simply want to go there right now, look in your chat box on the far right. Pro Trader Strategies has posted a live link there. All you have to do is simply click that on, and it will automatically take you to the $37 deal. If you have any questions, if you're interested in more information, contact the good people at Pro Trader Strategies. They're standing by the phones right now. They can answer any question you have. They can put you in the right direction. They can show you other strategies of mine that are also available as well. Okay? In conclusion, as we close up here, I want to thank you so much for attending, taking time out of your day to hear me speak today. And as we look at one last disclaimer, I just want to say thank you so much once again, and I look forward to all of you becoming students and members of mine at Specialist Trading. Hope you take advantage of this special offer, and have a happy New Year and happy holidays. We'll see you next time. Bye-bye.